Hi, my name is Michael Roberts. I'm the Executive Director of Comprehensive Youth Development, and Taking Stock starts me.
2 minutes to go into the close here, and we do see a fair bit of profit taken across several of the major market indexes, but don't call it a comeback for the Dow, currently up 1/100% into the closing auction. We will see what the final tail of the tape has to be, and without a doubt today, the biggest story on Wall Street is two different tails of the tape for Microsoft and Meta. Microsoft shares down 11%, its worst single-day performance going all the way back to the depths of the COVID pandemic in March of 2020. Despite a beat on top and bottom lines, renewed concerns over the durability of the AI spending storyline. And as for the team over at Meta, they've simply knocked the cover off the ball. Shares of Meta up 10% on the day, as they say they plan to spend at least $115 billion on AI data center build-outs this next year. For the S&P 500, your strongest performing sectors on the day are telecom, energy, as well as real estate stocks. So we are seeing the laggards in the S&P today include technology, discretionary, and utilities, all a part of the risk-off rotation on this Thursday, January 29th. Welcome to the show, a very special edition. It feels special down here. You're watching Taking Stock. I'm your host, JD Durkin. Mere moments away, my friends, from the ringing of the iconic closing bell here at the New York Stock Exchange. We've got the cast and the team behind the award-winning HBO show Industry here to do the honors. We got an amazing show on tap. We will pick up our ongoing market coverage after Industry rings the closing bell. The cast and the team behind the award-winning hit show on HBO Industry join us here live at the big board to ring out the close of today's financial trading. You see the crowd down here. Everyone is hyped up to go, as are we for the show. The oil benchmarks both up here on the day, reaching their highest levels, going all the way back to early August. The crypto majors getting absolutely throttled on the day. There's no other way to say it. We'll talk a lot more about Bitcoin, ETH, and Solana coming up in just a bit. Also catching a bit of a bid, not all the stocks in these sectors, but the big banks led by B of A. Oil and energy having a strong session as well. Industrials led by Honeywell, which is up 4% on the session today. And the legacy automakers, not Tesla after earnings. Tesla had a bit of downward pressure, but the real legacy American brands led by GM having a very strong tape here on this Thursday. Let's bring in our first guest. He is making his Taking Stock debut, the great Jim Thorne, Chief Market Strategist at Wellington Altus. Great to have you here.
JD, how are we competing against this?
That's tough. That's tough to do. I know. Amazing
This is a tough crowd, man.
It is, but you know what? Listen, we got this whole crowd as far as you and I are concerned. Yep. They are all here for the show, and they're all here for you as well. So listen, for the most part, despite these little days of profit taking, we're still basically at all-time highs, despite the backdrop of uncertainty, geopolitics, what's going on with the Fed. What do you see when you look up at price action these days, Jim?
Hey, it's options week, JD, so it's insanity this week. But we're going higher. We touched 7,000 this week, and we're going to finish this year at 8,000. Risk on, rotate, use the charts as your friend, and just check the noise, check your biases at the door, and drive on. Secular bull market.
How do you go about separating signal from noise? You mentioned the charts. Are there key indicators that you're looking for? And ultimately, there is a lot of noise. There are a lot of shiny things for traders and investors to see, but how do you stick to the fundamentals?
Plan your work and work your plan. Sell parabolic charts. Look at the charts. Find the stocks you like. Find the themes you like. And realize that we're in a period of time where we can get exuberance on the upside and the downside. Buy low, sell high. I know that sounds profound, but that's what you got to do.
You say sell the parabolic moves. We've had a lot of them.
Sure.
Pick your sector or big stock, splashy stock of choice. But how about gold and silver on those
Gold,
charts?
silver, the memories companies, right? Yep. Uranium, all of them that have had massive runs, you just sell them. You love the theme, but you take what the market's giving you, and then you go shift. What does everybody hate? They hate Bitcoin, they hate crypto. Now, if you don't have the fundamental story on crypto right now, and you don't see this as an opportunity, then don't buy it when it's 200K, all right?
What did you see out of the Federal Reserve yesterday? This is the third to last meeting for Jerome Powell as chairman of the central bank. We knew what the decision on the short end of the yield curve was going to be, but we also had two dissenters as well. Sets up a kind of interesting backdrop for the next 7 meetings in 2026.
the Fed is incompetent. They need to structurally change. And if we go back, JD, to the 1980s, we are shifting from a Keynesian world to a supply side world. We're shifting from MIT and Yale to the University of Chicago. So the majority of people on Wall Street and the Fed are Keynesian. And what's happening with Bessent and Trump and Ludnick is it's a supply side economics. They want to run it hot. And when you shift the supply curve out, prices come down. And this is blowing people's mind.
You mentioned President Trump. What do you see as he dukes it out right now on the public stage with the Canadian Prime Minister, Mr. Carney? Talking about an important trading policy.
You can't. I'm a man without a country here.
I'm sorry to hear that, but it is an important one for a lot of investors for cross-border trade. What do you make of what's been made?
Canada needs the United States. We've got to come to a deal where Canada can be treated inside the United States in the new trading environment. That's what has to happen. A lot of this is performative, but I will tell you, Canada needs the United States. There's going to be a deal, and I think Carney knows it, and this is just theater.
Jim Thorne, Chief Market Strategist at Wellington Altus. This interview was not political theater. This was the good stuff right here. Thanks for being on the show.
Man.
Really good to have you. Josh, going to grab your microphone. Howard, you and I are going to head this way right through the crowd and say hello to all my favorite people here. All right, we will now bring you the latest Polymarket event contract odds as Polymarket participants try and figure out at long last, like Jim and I were just saying, who's the next Fed chair going to be? We've seen the odds on this particular prediction market flip a lot over the course of the last few months. BlackRock fixed income chief Rick Rieder, yeah, he's now in the lead. The fourth odds-on favorite in the prediction marks going back to Thanksgiving, about 38% chance for Rieder. Former Fed Governor Kevin Warsh right now at 29%. Fed Governor Christopher Waller up to 14%. Doesn't sound like a lot, but we actually saw his odds kind of jump up after he was one of the two dissenters Jim and I were just talking about down in Washington yesterday. And the White House's Kevin Hassett at 8%. He, of course, had been the favorite throughout much of the fall. Those odds have changed a lot. We could get that announcement any day, any minute from the president on social media. More than $280 million in total trade volume on Polymarket, trying to figure out who the next Fed chair announced will be. Howie, before we toss a break, we'll take a look at a couple NYSE notables. How about the team from MasterCard? Net income for the quarter up 22% year over year. Net revenue up 17%. Analysts from Morgan Stanley giving MasterCard an overweight rating, citing this company as a beneficiary of security and fraud detection in e-commerce. Shares are still down so far year to date, about 5%. And how about the team from Royal Caribbean? Up almost 19% here on the day for the quarter. They saw strong cruise demand, revenue up more than 13% year over year. But here's what really pushes up the stock. It's all about guidance. It's about the picture that you paint for investors about what's still to come. RCL hitting as high as $350 on the day, its highest level going all the way back to September 12th. Shares of Royal Caribbean up more than 20% so far here in 2026, also helping to boost shares of Viking and other cruise lines on this Thursday as well. All right, Cheddar's very own Chris Castellino is now back with another personal look at the latest auto tech from CES 2026 in Las Vegas, Nevada. Take a look.
You don't need to buy a brand new car to experience the AI revolution in mobility. SoundHound AI is bringing conversational voice technology to vehicles that are already on the road, and they're doing it in ways that go far beyond asking for directions.
We're a voice and conversational AI company. We focus on a variety of industries, but we're really focused on automotive. Behind me, you can see we have a Lucid vehicle. We power the voice assistant in cars, but we're really excited to be introducing our expansion of voice commerce.
Voice commerce means you can actually transact, order food, book reservations, and even find parking, all through natural conversation while keeping your eyes on the road.
We work with OpenTable for table reservations. So you can say, show me Italian restaurants within a mile that have availability at 7 p.m. How useful is that? And it'll filter the list with voice, and then afterwards you can say, all right, I want to book that one for 7 p.m. and it's done. You never looked at your screen, you never touched anything, you weren't distracted.
I have made a reservation for tonight at Chop House at 8 and secured a spot nearby at the 78th Street Garage.
All of these agents that we're building work together to create this value at all voice enabled and all in the vehicle.
But SoundHound isn't stopping at voice. At CES this year, they debuted Vision AI, a system that uses the car's forward-facing cameras to understand the world around you.
We're debuting Vision AI. So a lot of cars these days have forward-facing cameras, and we can ingest that information. And now, as you are driving away around from things, you can see, well, what does that sign say? What information, what building is around me? We can process it through our AI and answer the question. Great for use cases like you're driving in a foreign country, you don't know what the sign says, you say, what does that sign say?
The system also serves as a real-time owner's manual, answering questions specific to your exact vehicle and trim level.
How do I enable the rear wipers in this car?
To enable the rear wipers, use the control icons on the left cockpit panel to select off, intermittent, or continuous mode.
I think I have a flat tire. What should I do?
Stop driving immediately. Inspect the tire for damage. If punctured, do not drive, use a repair kit or tow the vehicle to a service center.
And the climate control, you don't even need to use specific keywords.
It's really hot in here.
Decreasing temperature by 10 degrees Fahrenheit.
For consumers, SoundHound's technology is already available in vehicles from Lucid, Hyundai, and more.
Agentic AI is all the rage, and we really think that 2026 will be the year that agentic AI breaks through. And what's really important is that you're using generative AI, narrowing it to accomplish specific tasks. So we do that in the cloud, but we're also partnering with NVIDIA to be able to bring that experience onto the device. We call it Edge, which means you have a full agentic experience entirely embedded in the vehicle without any cloud connection whatsoever using NVIDIA hardware.
The future of mobility isn't simply about getting from point A to point B anymore. Car makers are now focused on scaling autonomous, intelligent, and conversational technology. Are you ready for the ride? For Cheddar, I'm Chris Castellino.
Welcome back to Taking Stock. We are live here on the iconic trading floor of the New York Stock Exchange. Time to get you quickly caught up on a few of the headlines you need to know in the world of fintech, crypto, and artificial intelligence. First off, as we said at the top of the show, the crypto majors, they're all down in a big way today. Bitcoin selling off 5.5%, ETH down 6.5%, Solana also down 6.5%. Crypto super PAC Fairshake, in other news, says it has built a $193 million war chest ahead of the upcoming midterm elections. It's got backing from Coinbase, Andreessen Horowitz, as well as Ripple, as senators prepare for the first vote on a sweeping crypto regulatory bill. And finally, Fidelity preparing to launch its own dollar-backed stablecoin in the next few weeks, a move that pushes stablecoins deeper into mainstream finance as a real-time alternative to traditional banking rails. Our next guest of the broadcast joins us right down here on the trading floor. This is Rune Christensen. He is the co-founder of Sky Ecosystem, also director of Sky Frontier Foundation. I hope I got all that right. Thank you for being here.
Super excited to be here.
Can you give our viewers first and foremost a bit of an introduction to your current work for anyone a bit unfamiliar? And Rune, what would you say are among your top priorities with the firm here in 2026?
Absolutely. So Sky backs USDS, which is the world's largest yield-generating stablecoin. And what really sets it apart is that it's entirely focused on tapping into the power of blockchain to deliver efficiency and risk-adjusted returns. So it's one of the only stablecoins that can give you a built-in native yield, right now at 4%, called the Sky Savings Rate.
How would you describe the state of digital assets in the United States at the end of January of 2026?
I mean, it's everything we have been dreaming of over the last 10 years, I think, as we came out of the sort of early days of crypto. Now it's been institutionalized, right? All the big institutions, they're all in on stablecoin. I mean, you just mentioned, there's yet another large firm launching a stablecoin. At Sky, we're working with BlackRock, Janus Henderson, BNY Mellon, all these large names.
Oh yeah.
They're all, they all want to come on chain. They all want to tap into the benefits of DeFi. And actually, Sky has like a history of really being one of the major gateways to all of this. So we're super excited with all this momentum and interest.
Talk to me a bit more about that momentum. How do you see these USDS stablecoins kind of changing the game? And I got to imagine, to the point of evolving conversation, a lot's changed in just the last year. I feel like now with the new administration, a new look Congress, finally willing to take up some of these issues that lawmakers previously kind of punted on for many years.
Yeah, absolutely. I mean, I think fundamentally it's the benefit of stablecoins, right? You have the Genius Act and you have this sort of recognition that stablecoins are the future of finance. And so the thing is, right now there's more than 300 billion in stablecoins that are on the blockchain, but they're not earning a yield. So all this money is idle. And the thing about capital is it wants to generate a return. And this is what's really fueling the growth of USDS in the last year. It actually doubled in size. And at the Sky Frontier Foundation, we're projecting another doubling over the next year, coming from these, all this capital getting into blockchain through these more sort of more traditional systems that are centralized. and then leaning into the benefits of blockchain, tapping into highly efficient systems like Sky and getting the Sky savings rate with USDS.
What do people still get wrong about things like DeFi protocols or in the other parts of the conversation? I got to imagine from where you're situated, Rune, you still see a lot of misconceptions and maybe some misinformation out there.
Yeah, I think, a lot of people think all crypto is super risky. And if you look at a system like Sky, we have an 8-year track record. We're using best-in-class risk frameworks based on Basel and all of this sort of traditional systems to manage risk. And I think that's something that's really also the institutions are coming around, and that's also why we're seeing so many institutions like BlackRock and so on actually being willing to really work with us and tap into this potential.
Rune Christensen, co-founder of Sky Ecosystem, also director of Sky Frontier Foundation. Rune, terrific interview. Come back out on the show anytime. Really good to have you.
Absolutely. Thanks for having me.
Don't go anywhere, folks. We've got much more Taking Stock coming up right after this. Welcome back to the show. Time now for the latest headlines and startups, raises, and rounds for your Thursday afternoon. First up at this hour, Elon Musk's xAI landing a $2 billion strategic investment from Tesla, extending its recent $20 billion Series E in a circular deal. All of this coming as Tesla pivots from EVs to AI and robotics. Next up, Upwind raising $250 million at a valuation of $1.5 billion as the company builds runtime cloud security to protect AI-driven, fast-moving infrastructure. And finally, the Women's Health, Sports, and Performance Institute launching with over $50 million. That is being led by Viking Global co-founder David Ott, as well as New York Liberty co-owner Clara Wu Tsai, targeting long-ignored female athlete data gaps. All right, earlier today, FinTech TV's very own lead anchor, Remy Blair, sat down with Dirk Wallinger of York Space after they rang the opening bell here for their highly anticipated IPO at the New York Stock Exchange. Take a look.
Welcome to FinTech TV. I'm Remy Blair. A major milestone for the space economy as York Space Systems prices its IPO at the top of the range. Now, the Denver-based defense tech firm priced an upside offering at $34 a share, raising $629 million and securing a $4.3 billion valuation. And unlike previous space listings, York enters the public markets with proven execution, already serving as the Pentagon's leading satellite provider by volume. And with over 4 million on-orbit hours logged, the company is now a key contender for major programs by the government, like the Golden Dome missile shield. Well, joining me here at the New York Stock Exchange is Dirk Wallinger, founder and CEO of York Space Systems. Dirk, welcome. Thank you so much for joining me today.
Thank you for having me. Appreciate it.
Well, you were just on the podium earlier ringing the opening bell. So what is your vision for the company as you go public?
Yeah, so really York is a turnkey space provider, so we're providing all elements of the ecosystem. We're doing that, as you mentioned, as a #1 provider now, but really what we want to do is really accelerate that growth and really continue to do quantity and scale that the government demands, right? So systems like Golden Dome, it's SDA's PWSA, they're really about quantity. And so when quantity is the multiplication factor, it needs to be very affordable. And schedule is extremely important to the United States as well. We're falling behind, frankly, with space-based capability, and we want to take the lead once again. And so we're going to do more of that. And this listing will help us to do that.
And of course, we're watching your stock this morning as you go public. But when it comes to your competitive advantage compared to other organizations, give us the lay of the land.
Yeah, I mean, where York fits now is we have multiple platforms that have been deployed in orbit at constellation level. 3 months ago, we delivered a full rocket full of our spacecraft. Another month or so, we'll be shipping our next constellation kind of capability, operating it from 3 different mission operations centers. So we're proven ability to deliver. And that's really the key. I think a lot of the other defense techs are pretty early as far as capital raises to fund operational expenses and things like that. York is funding our ability to scale more and deliver more. So that's a key differentiator between what York's doing and a lot of competitors.
And we're here in the U.S. at the New York Stock Exchange, and I understand that your manufacturing is 100% U.S. based. So when it comes to national security, can you walk us through why it's so important?
Yeah, so controlling our supply chain is obviously going to be really important. We know that there are bad actors out there who would love to infiltrate the supply chain and make the U.S. not have the capabilities that this country needs. So the U.S. supply chain is a really key, important piece for us to continue to deliver at scale. York has made significant investments in that supply chain to scale it and grow it more. And that's just going to be critical for the U.S. to know that the things that we're deploying in orbit are going to meet the needs of the country. And so we've seen historically that foreign actors can inject themselves in the supply chain. So we've always placed an emphasis on a U.S. company, U.S. technology, U.S. delivery. We're really proud of that.
And for viewers out there who might want to know more about the government contracts, give us an understanding of what this might look like. And when you're talking about scale, what does that look like?
Yeah, so government, with the government contracts, I mean, obviously support from Congress is really important to what we're doing. Passing budgets is also very important to what we're doing. And that's what's going to allow the U.S. to be able to proliferate the way that it needs to. So the U.S. right now is moving from, billion-dollar satellites built over a decade to hundreds and thousands of satellites, typically in LEO, low Earth orbit. And that move is really critical for us right now because it will give us a strategic advantage versus our adversaries. And so now York is, we have a very large facility capable of producing up to 1,000 satellites a year. And what we want to do is start to maximize that because that's really what the country needs is we need hundreds of thousands of satellites delivering resilient solutions for the United States taxpayer. And so that's what we'll be doing over the next year is really ramping up that production scale and making it, shorter turn times to deliver.
And finally, Dirk, before I let you go, once you become a public company, what would you say are the key performance milestones that investors should be watching for?
I think it's the ability to continue to deliver at larger scale. So we've demonstrated the ability to deliver 10 satellites, 20 satellites, et cetera. But what the country needs is hundreds of satellites. So I think that'll be the key metric for us, focusing on really great performance at an amazing price point. Price is critically important because when you're talking about proliferation and hundreds of thousands of satellites, every multiplication factor on that price significantly can grow the total cost of the taxpayer. So focus on capabilities that work at scale at half the price is really what the country needs, and that's where we're going to focus the most.
Well, Dirk, thank you so much for joining me here at the New York Stock Exchange on IPO Day.
Thank you. Thank you for having me. I appreciate it, Reverend.
Thank you.
All right.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money, where we break down the revenue models of the companies that you know, you love, maybe you hate, who knows. But today we're going to be breaking down the fintech known as Socure. I happen to have known this company for over a decade, and it's going to be so fun to break down the identity layer that turns who you are into approved go spend. That is what Socure is known for. If you can't trust identity, you can't monetize the customer. Socure verifies people and businesses, KYC and KYB for the business. It runs document checks, it sanctions screenings and fraud risk scoring in milliseconds. So fintechs approve more legitimate users and bounce the bad actors. Here's how that money flows. Usage-based API pricing per verification fees across KYC, DocV, AML, and fraud scores. Some of these we can do in Jargon Translator because there's a lot of acronyms up in here. Then we've got tiered models, synthetic ID detection, device signals, watch list, more breadth, higher average revenue per account. Continuous monitoring, rescreens and alerts turns identity into recurring revenue. Optimization and analytics, premium turning to lift pass rates and cut false positive. And by turning, I meant tuning, of course. So here's the thing about Socure. Scale matters. In 2024, Socure claims to have verified 2.7 billion identity requests across 370 million unique identities and expanded to 2,800 plus organizations, from financial services to government to e-commerce. Performance claims around capture rates and speed underpin the sales pitch. More auto approvals, fewer false positives, and faster decisions. Here's a cool duet, Socure and Alloy, which we'll feature in the next episode. Alloy orchestrates identity flows, Socure supplies the high accuracy verification and fraud scores. Documented outcomes include roughly 50% fraud reduction, roughly 95% fewer manual reviews, that's a lot, and higher new account conversion, turning identity from a compliance cost into an ROI story. So let's break this down. Breadth, speed, consortium effects that make the model smarter with every decision. Why we need this is because latency, pass rate drift, and audibility across jurisdictions can break that trust. So this stack has to stay tight. Socure sells trust as the front door. Better pass rates means more customers, and more customers means, you guessed it everyone, more revenue. Identity isn't just paperwork, it's profit infrastructure. That's how Socure actually makes money. So here's the question. Are there any other companies that you want us to break down, see what their revenue looks like? What does that P&L look like underneath the hood? Put them in the comments and maybe we'll feature them. Back over to you.
Sorry, that's okay.
Markets in mixed territory on this Thursday, but we turn our attention to tomorrow here on Wall Street, where we will get quarterly results before the bell from names like SoFi, American Express, Verizon, Chevron, and ExxonMobil. That'll do it for today's edition of Taking Stock. Have a great night. We'll see you again tomorrow. Woo!